Hi everyone, I'm Deepka. I'm part of the investment team at Northzone. These are our offices, so I would like to extend a very warm welcome to all of you, and thanks so much for making the time and being here. If you haven't come across, we are a venture capital investor. We've been active for over 25 years, investing across Europe, the US, and in a really wide range of different sectors. You might have seen some of our portfolio companies on the wall as you might have walked in, or you can take a look later. But we're known for investing in marketplaces as one category, but also have invested in, a wide range of different companies, probably most well known for the likes of Spotify, iZettle, Personas of the world, and are also very proud shareholders in MarketFinance, who obviously are fantastic, and we're really pleased to be co-hosting this event on marketplaces, given we share the same enthusiasm for marketplaces as they do. And just a quick note on sort of just marketplaces in general from a venture perspective. I think venture and marketplaces have really been such a big part of tech and venture, partially because of some of the inherent characteristics of any type of marketplace. First of all, they're very capital efficient, and obviously that you can really build network effects that just keep getting stronger and stronger over time. So it's not surprising that we've seen a lot of venture capital go into marketplaces, and really over the last 1 or 2 decades have seen absolutely huge outcomes in almost every conceivable consumer category of marketplaces. Anything from cars, shoes, clothing. There's probably a top of mind marketplace in every geo in the world. That's become absolutely huge. And on that note, when we look at B2B, like the lens on B2B marketplaces, it really feels like we're actually still in very early innings of the category, even though in the last few years, B2B marketplaces have been more in the spotlight. There's been more funding directed at them. And the fact that, all of you guys are, or most of you are working in one or have founded one, and are seeing real growth in the sector. And I think partially what's so interesting about it, or why we are so interested in B2B marketplaces, is both the fact that it is early, and we feel it's early innings for the category as a whole, but also the fact that it shares the characteristics such as network effects and capital efficiency that make consumer or B2C marketplaces attractive. But the actual value that could be generated, or the impact it could have on the relevant industries, feels even greater at this point. If we think about consumer marketplaces, a lot of them, it's sort of been, the whole phenomenon around it has been called sort of the unbundling of Craigslist, or the unbundling of Gumtree, for the local example. Whereas in B2B marketplaces, you're not unbundling a existing online platform. What you're actually doing is, in many ways, you're shifting the way people are doing work in certain industries. And a lot of the time, depending on your vertical that you're operating in, you're actually changing how offline practices or very inefficient ways of working, and bringing businesses and the people who run those businesses into using online tooling, digitizing their businesses, which primarily have been offline, which in itself is probably a harder thing to do and to achieve, but the actual reward and the value that you generate out of that, we feel, is actually more impactful and is going to be more impactful in the future. So with that said, we at Northzone, we're huge believers in the increasing penetration of software in the world, and the ongoing digitization of the workplace, of different industries, of different verticals, and the way people sort of run businesses. And as a result, we feel that actually B2B businesses are really well placed and positioned to both take advantage of that trend, but also be a catalyst for it. Even, and this is the elephant in the room, as we're entering a new macroeconomic environment. So bottom line, very bullish on B2B marketplaces. And on that note, hand over to Anna on the panel.
The whole, hopefully you can hear me. Yeah, you can hear me? Oh, good. Okay. Well, firstly, thanks everyone for coming. It's great to have this energy in the room. Post-COVID, it's rare to see a full room like this. So, really appreciate people taking time out. And I know life has become very busy. So, I appreciate it. Thanks, Deepka, for that great intro. And clearly, both Northzone and MarketFinance, we really love B2B marketplaces. That's why we're holding holding this event. We have great founders in the room. We've got more on Zoom, and some who can't come, but are going to promise they're going to watch the video. So yeah. So I'm Anil. I'm a co-founder, CEO at MarketFinance. We've been in and around B2B transactions for more than 10 years. At the last count, we've helped businesses collect over 20 billion in B2B payments, and we've lent over 3 billion to small businesses, which is not easy. It's a tough business. Recently, we've been investing really heavily in our product to start to embed into B2B marketplaces. Personally, I think that this is a huge mega trend, the coming together of marketplaces and finance and the decentralization of finance out of banks. And on that note, we had, recently we've been doing some great partnerships. One that we were very excited to announce this week was with Nivoda, a leading diamond and jewelry marketplace. We have the two founders, co-founders here, growing like crazy, 100 million GMV dollars this year. They're promising. It's definitely one of the, definitely one of the bigger marketplaces where we're super proud to be working with them. The team is really excited, and it's just the start, really. So I guess, going back to B2B, we have all the scars of dealing with B2B transactions over the last decade. B2B relationships and transactions are full of friction, offline processes, admin, which really holds business back. So like we saw with consumer marketplaces, we think that traditional B2B industries are going to be disrupted by new entrants. They're going to be digitized. The internet is going to change how we do business and unlock all those powerful benefits of marketplaces. So over the last kind of 12 months, my team and myself, we've been really enjoying talking to booming marketplaces from different sectors, from food and drink, from construction, from IT, from beauty, from general retail, and even waste tech. It's even going on in waste. So these marketplaces are often founded by tech-savvy entrepreneurs, sometimes industry outsiders, coming in, but often paired with insiders, and we'll talk a little bit about that. The coming together of the old world and the new. So I'm really happy to have three great founders here with me, and B2B marketplace pioneers. So let me quickly introduce. So Sam at Curate Beauty, Erez at Rooser, and Jina at Ankorstore. And let's get started with just a short intro and the founding story. So Sam, why don't you kick us off?
Curate Beauty, which is a beauty and wellness wholesale marketplace. We started in 2020, just pre-pandemic, great time. And our customers are retailers, department stores, anthropology and phrases, and then kind of smaller independent shops, conscious beauty stores, beauty websites, beauty salons. We also work with sort of fitness studios and gyms as well. On the brand side, we have about 250 brands on the platform across all beauties and skincare, makeup, tools, supplements. And yeah, that's me. I previously, I guess, a bit of an interesting background is that I was a beauty editor, so I didn't come from a tech background. I worked in beauty for about 12 years, and wrote for lots of different magazines, and just loved independent brands and wanted to work closer with them to provide a better outlet for them to meet.
So kind of an insider. Would you say an insider? Yeah, more of an insider. Yeah. Erez, tell us about yourself and Fish.
Yeah, I couldn't be more of an outsider to the industry than I am. So I'm Erez. I'm Rooser's COO and co-founder. We're a B2B seafood marketplace on a mission to eliminate the seafood waste of the world. And I think one of the big things that we're quite excited about when it comes to B2B marketplaces is that there's an opportunity, and I think Deepka touched on it before. There's an opportunity to basically take the supply chain, make it a lot better, and basically save quite a lot of waste that's happening in the process. I usually, when we have a crowd like this, I would assume that like at least 50% of the people watch Seaspiracy and are now looking at me like I'm the devil. But I'm sure that you guys would know the statistics of like, just because of supply chain inefficiencies in the seafood industry, pretty much out of every 3 fish that we catch at sea, 1 of them goes to waste before it gets to someone's plate, which is super bad. I don't know how to describe it in like better words. And I think that what we do as humans quite well is that we always think about super sophisticated solutions to feed the world, but we don't think about the simple ones. So we go and like culture salmons in a lab and we create fish farms and all of that stuff. And actually the job is pretty simple. Improve the supply chain, cut on the waste, and that's it. Then we can all continue enjoying fish.
Good. And you're not a fisherman, right? By trade.
Not luckily my co-founders are, because I don't think that I would survive a day in fishing. So I used to be in fintech for the last 10 years. So used to be the chief operating officer and the chief risk officer of Go Cardless for 7 years. And prior to that, I was at eToro. So I did the move from fintech to fintech. That's the last dead joke that I'm going to.
I don't think it's going to be the last joke.
No.
I don't think it's going to be the last joke. Thank you, Erez. And finally, Jina, you're a bit of a retail veteran, no? You've been working in a lot of e-commerce in the last decade. But tell us a little bit about yourself.
So I'm Jina. I'm the Deputy GM for UK and Ireland for Ankorstore. We launched in the UK a year ago, and we launched in general about 3 years ago in France. We are a B2B marketplace for retailers and just general brands to find each other. So on the retailer side, most of our retailers will be concept stores or some sort of groceries or specialty food shops or beauty stores or kind of independent shops that you think of when you walk down the high street. And then on the brand side, it's similarly the types of shops that you see in a nice gift shop or a concept store, ranging from home, kids, food, etc. So before I was at Ankorstore, I worked at a company called Book a Table, so an online marketplace for consumers to find restaurant bookings and also serve as kind of an operating system for restaurants. Then also worked at 2 early stage startups, one of which was also an online marketplace, and then spent a little over 5 years at the very early days of Groupon when we launched in the UK and in Europe. So yeah, it's a little bit.
Excellent. All household names, pretty much. Yeah. Okay, let's get right into it. We've spoken to many of you about the difficulty of starting a marketplace. You've got 2 sides. Which side do you focus on? That classic kind of chicken and egg problem. So Jina, why don't we start with you? Were there any kind of clever hacks or things that you guys did in the early days of Ankorstore or that you're doing now to help scale like the both sides?
I think for us, definitely chicken and egg. We took the bet on the brand side.
The brands are like the hipster brands.
The hipster brands, because we thought the most efficient way to build network effects was get the brands on. Generally, they will have some network of retailers that they work with already or a prospect list that they have already. That will be more efficient to build that side of the marketplace than for us to go out one by one to do that work ourselves. So that's the bet that we took, and it happened to work out in our starting markets. And similarly also for the UK. So there are great network effects in brands because most of them, even if they are very new, they have aspirational kind of retailers that they want to get into. And being pinged by many different brands to join this new platform, Ankorstore, is just a very kind of viral way to get started.
And did you have to offer like for free in the beginning, or like many marketplaces are saying like they have to offer it for free? But is that what you guys did?
Yeah. So we, very traditional. We were in very acquisition mode. So I'd say one of the main objectives that we have actually is that because we're in acquisition mode and because we're offering quite a lot to retailers to come on board or to brands to kind of refer in their retailers. One of the common objections that we get actually is it's too good to be true. Like everything that you're offering me is not only are you taking away our pain points that we've suffered for 50 years and all this, but why are you also giving me money on top of that? So It's actually what one of the difficulties is. Like, it's true, we will give you the money, trust us. But yeah, it's a different proposition from before when you're selling a subscription or when you're trying to get commission off of a sale or something like this.
Absolutely.
Very, very different.
And what about you, Erez? Fish or restaurant first?
So I think it's like the way that we hacked it in the early days. If you think about fish trading, if any of you watch the Wolf of Wall Street, where it's like trading over the phone and like pieces of paper being moved around, and that's how the fish industry basically trades commodity today. And so we did a bit of fake it till you make it at the beginning. So there would be an order on the platform, and then would be a bunch of really great seafood people kind of like doing this and matching the transaction manually, super manually. I think that one of in hindsight, it was a clever thing to do. I don't know if we planned it that way, but we basically took like the best seafood salespeople in the industry that have a lot of gravitas. And I think, an industry that operated in a certain way for like centuries, it's quite hard to build a rapport with the businesses that you want to get into. So that's one big thing that we've done. The other one that was quite interesting is like, and I'm sure that this is a problem in a lot of B2B marketplaces, is stabilizing the cash flow between the different parts was a big thing. I think, again, seafood, people buy fish off the boats and pay within 7 days, and then only get paid after 60. And so there's quite a lot of cash flow deficit in the middle. So for us, it was like, we will guarantee the payment at a given time and make sure that you can stabilize your business. And I think that's quite important.
That's a big draw.
Yeah.
It's quite powerful. Cash counts.
Yeah.
And Sam, what about you? What was the early challenges?
Before we actually launched the platform, I had a consultancy business where I had retailers and I would match them with brands almost offline. And a bit like you, we'd kind of scramble to find the brands, and then we realized this is a bit ridiculous. We need to have some sort of portfolio or showcase our brands. And so when we launched the platform, we then decided that we needed to have at least 50 good brands to showcase and have on board. And so it kind of, was a bit of both. And I guess for us, the ways in which we've helped kind of grow both sides have been to put our expertise at the forefront. So we've done like trend reports that have gone out and got us great leads in from both the brand side and retailers, and also a virtual trade show. So like our beauty is very touch and feel and sensorial, and you miss all of that, I guess, when you're just online. And so to bring it to life, we wanted to create an experience and an event also in lockdown. That was virtual, and
So do you send them products and then get online, or is it all online?
Actually, well, there's been two, and they were two kind of different formats. But we had different leaders and experts in beauty come and speak about trends, and then we also did sort of like a QVC style, 3-minute pitch from each brand, sharing their story. And that's, I guess, the exciting part about me. I think about independent brands and what you fall in love with a brand and how you get to know it is hearing from the founder and the story. And we did these sort of short 3-minute pitches in our sort of collections and categories. So we had all female founders and Gen Z brands all kind of mixed together. Yeah,
that's really smart, actually. So content and events can be really really powerful. So it's not just about offering it for free, right? You can do these hacks. And I guess industry. So we talked a little bit about being industry outsider or insider. When you disrupt markets, sometimes there's like distrust, right? Or the incumbents don't trust you, don't want to deal with you. Sometimes actively try and dissuade people from participating in the marketplace. They feel threatened. Have you come across any examples of this in general? I mean, are people like happy to see you or not?
This resonates really clearly with me. So within retail wholesale, I'd say that the industry is been largely the same for the last 50, 70 years. So to come in and disrupt in such a way, one of the common kind of objections we get is it's too good to be true, but then also service providers into the industry, so trade shows, et cetera, view us as like a death kill, mega threat. which we don't take the view of, but I can understand how that comes, that perception can come around. So yeah, that is a challenge for us. Because
do they try and dissuade people from trusting you? So they spread rumors about you?
I don't know if they actively spread rumors, but they
I mean,
stop us from attending their trade show and
block you.
Yeah.
Any other kind of reactions, or sometimes is it positive?
I guess for us, our customer base is the small independent shop, which is easy to get into and speak to the founder and actually find someone that is in the position of authority and that can make the decision. For us, the hard part has been the bigger department stores. They've got so many processes in place. They've already got platforms they're using that are so antiquated and horrific. And I don't know how and why they're using it, but actually for phrases, they found us, they discovered what we were doing, and they were like, this is really interesting. We need innovation, we need change. And retail's at such a pivotal point that unless the big guys, I guess, take note, then they're never going to last. And I guess that's what's been the knock-on effect for so many big department stores closing down.
Yeah. Erez, anything from you?
I think that so you use the word disruptors, and that's something that we're trying to kind of avoid when it comes to seafood. I think the way that the industry works today, it requires better facilitation of communication between the different parties. You kind of think about the industry, the motivations are two, basically. It's like, can I get higher margin for the fish? Can I cut on my cost? And as long as you basically demonstrate that you can help them with that, the trust begins to build over time. So it will start with super small transactions. You will not put all of your reliance on us, but over time, as you see these then you just expand more and more.
Yeah. Excellent. Let's move to another. I guess what we're seeing a lot in marketplaces is in some consumer marketplaces, people just match participants, but what we're seeing in B2B is a lot more control over all aspects of end to end, the control between buyers and sellers and how logistics gets done. So I guess how important is that in your businesses? Do you need to quality check? I know, Erez, you have this warehouse, right, in France where all the fish get funneled. Is that really? Do you have to take a lot more active role?
Yeah, I think it's quite important. Again, in seafood, what the supplier cares about is, as you guys can imagine, it's the stuff is rotting away as soon as it leaves the ocean. So you kind of need to push it through the chain as quickly as possible. And so suppliers, what they care about the most is making sure that they sell the fish quickly and then they get paid on time. And then for the buyers, the more important bit is finding the fish that they're looking to buy, but then getting them at the right quality and at the right time. And that's been a massive pain. So I think that where we meet it as consumers is that you show up to a restaurant, you look at the menu, there is a fish there that you really want, and then the waiter comes and says, we don't really have it today. That's mainly because of the supply chain challenges that are occurring. And so the key thing for us was to create something in the middle that we ensure that the quality is exactly like was promised to the customer. The logistics run on time. We don't own any of the logistics, but we make sure that the trucks leaves on time. And if someone is not getting their fish because the boxes missed the connection, we will replace them. So that's quite big for us to build the trust in the industry.
And are your market, Jina and Sam, are your marketplaces similar? Do you get involved or you're not involved?
Well, not from our side too much on hands-on. So we're drop shipment, so we don't touch the stock. I guess for us, our hands-on service is more at the beginning stage and the recommending and sharing samples so that they can actually see products before they buy. And then from that stage, once they try and they love, then they kind of purchase, and then we don't need to touch the stock.
You kind of carefully vet the participants.
Yes.
And that's your kind of quality control.
Yes, exactly.
Rather than taking physical control of the stock. Yeah. Interesting. And in consumer marketplaces, there's this tendency that in each segment, there's one dominant marketplace that takes 80% of the market. And then there's lots of smaller ones. Is it the same trend in B2B? Is it a winner takes all, or is there space for multiple? I might ask Jina, given that Ankorstore is competing with lots of people.
So I'm very used to being in a super competitive winner take all environment. So a Groupon or lots of colleagues of mine have gone on to the Deliveroo's of the world, and these are all you make one dinner order a night, it's winner take all. What I find in retail wholesale is not as winner take all, or this is not the dynamic that I feel with retailers and wholesalers. And I think it's a plus for us to have other participants in the market because we are disrupting something old and archaic, and to have other companies that are doing the same thing and doing the education piece for us we don't think is a bad thing.
So there's space.
There's space, yeah.
And do you both agree, or?
I think that's absolutely. When it comes to getting, I guess, people to buy, well, I had a brain meltdown for a second, so I'll pass on and then I'll come back to the answer.
But I guess because the thing is, it's harder sometimes to it's hard to expand international. It's more, I don't know. It seems like B2B is harder to expand internationally potentially, or are you kind of going international from day one?
So for us, most of our customers are in the UK. We do have international retailers which we work with, but actually setting up shop in our country, you guys will be much better to answer that.
Yeah.
But in terms of I kind of do agree with you. Fair had helped, I think, set up the B2B marketplace there, the wholesale marketplace of what B2B marketplaces were, and that helped us. But I think that having different niches within B2B marketplaces will be the future, and I guess that people now want choice and they want options of shopping, and they don't just go as they traditionally would with maybe one distributor to look after them. They want all different options, and there's no reason why they can't have fingers and lots of pies to bring in more. Yeah.
Okay. Let's turn a little bit to, I think you touched on it a little bit, Erez, but embedded finance and marketplaces. So I guess, there are some marketplaces that start not even thinking about finance. And then there's some marketplaces that are from day one, we're going to make finance part of our offering. How important is offering credit terms, stabilizing cash flow, as you said? How important is that to your marketplace? And when did you start even thinking about it?
For us it was quite big because seafood is very relationship based, and you connect with maybe 20 buyers and 20 suppliers, and so you do kind of, let's call it, mental credit underwriting. And so in order to kind of give the trust to people, to make sure that people pay on time, people that they don't know the Rooser platform, they don't know if we're going to pay or not, you need to make sure that you stabilize it pretty much from day one, so they let you into that 20 supplier or 20 buyer club that they're connected to. Yes. That's quite big.
Yes, because you've got to kind of mirror the terms that are offline. Yes. If you can't do it, then
the mental credit underwriting that's happening.
And Ankorstore, I think that was important from day one, right? As well.
Super important. Within wholesale, it's just a given that you need to offer credit to your retailers. So it was one of our first kind of value propositions that we offered was credit terms to our retailers. So it's super important to us that we're able to mirror that online as they get offline.
Yeah. And you're doing that in all your markets, or is it?
In all our markets,
yeah. And how do you think about, so another interesting topic is whether you build finance yourself, internally, or you partner, right? We have seen, there's a couple of marketplaces that we've met, and they're adamant we're going to do it ourselves. We're going to do the financing ourselves. But how do you think? Erez, you came from, I guess, fintech. So if anyone can do it, you should be able to do it.
Yeah. Which is exactly why I'm not doing it. Again, I think that credit in general is a really tough proposition to build. I think that there's quite a lot of data from just you need to lose a lot of money in order to, I think you guys know it. You need to lose a lot of money to kind of get some learnings and better your underwriting. And I think that there's quite a lot of investment. And I think our rule of thumb has been, we're selling fish. We shouldn't do any fintech related stuff. There are lots of companies that can do them themselves. I think at some point where I see this industry or embedded finance go to is that because it's a table stakes for B2B marketplaces, you need to offer these credit terms. There should be platforms that offer it as a service, and then maybe some of us will kind of offer our preferred customers a bit of more lending on top in places that the platform cannot underwrite. But I'm like a massive supporter of outsourcing it and not doing it again.
Yeah. Staying. I mean, I guess focus is really important, and I guess it's also interesting right now. I mean, in an unstable macro environment, the cost of getting risk wrong can be pretty catastrophic. So, yeah, I guess like partnering in a difficult macro could be a wiser thing to do. But I think, Sam, you also, right? You offer some finance options.
So we wanted to, from the outset, offer some sort of financial kind of support, as you said already. Like it's kind of standard to have 30 or 60-day payment terms, but we struggled big time to find someone that would work with a UK-based company in B2B. We work at the moment. We have a split payment provider, which is a bit like Klarna, so you pay in 3 monthly installments, and yeah, that's been our best bet. Otherwise, trying to do it ourselves, we've tried on a few transactions, not worth it.
Yes.
Awful.
Yes. Well, I know a company that can maybe help. So, Sam, you were saying you verify who you're dealing. You know, you curate it. Some marketplaces, I guess, you have so many participants. How do you like even check who these people are? Like, do you do like background checks on them, KYC? Is that difficult for you guys?
I think definitely in the UK, because you have such a large group of sole traders, especially within retail.
Yeah.
It's very difficult because as you know, it's very difficult to source publicly available information. It's incorrect. It's not consistent. It's hard to verify all this. And so, yeah, that's one of the challenges that we have.
And what about like when people don't pay and stuff? Do you get involved? Like, do you have to chase like people on like help with collection? I mean, not you again. Like, does your platform have to do that? Because that's kind of like muddies your brand a little bit, doesn't it? Like getting involved in that nitty-gritty credit collection.
I think so. Like Erez has said, but we're trying to focus on building the marketplace and providing kind of an operating system for retailers and wholesalers. And this is in it of itself a very difficult task. So we are not looking to become a fintech, or I think that the more we open that box, the more we see how difficult it is. And at every stage in that funnel and pipeline, it's like, oh my God, these are like separate businesses in and of themselves. So we will take on some of the risk where perhaps our provider is not yet there product wise to be able to cover a certain kind of category of risk that maybe we feel more comfortable with. But this is the minority. The majority of the cases we do not take on that aspect of it.
Great. Okay, let's talk a little bit. Let's end a little bit on kind of current economic climate. I know some of you have raised like money recently. Congrats, good timing. I know that others are trying to raise money. And I guess we'll come back to the VC part of it, but let's start first on kind of macro for your users. Like, does the current macroeconomic situation help or hinder your efforts right now? Like, does it make it harder to find customers, or does it make it easier almost? Jina, do you want to kick us off?
Sure. So we were founded right in the heart of a lockdown-based pandemic. We started in 2019, towards the end, and a lot of our kind of big business growth came during the lockdowns, because where brands would go to kind of open up new channels or markets, these outlets were not available to them anymore. So, and then on the retailer side, in a lockdown, you're shut down. So you need to find other outlets to source new brands, and you're more open to kind of going online. So this was actually a benefit for us as a business. So I think similarly, we're used to hard times. We're used to kind of, figuring it out. I think in a darkening macroeconomic environment, I have, faith that we will help brands and retailers in that sort of environment. I
so
can't.
They need you more.
They need us more,
yeah. Need you more.
But I can't lie that it is difficult, because we're based on retailer spend, and that's based on discretionary spend, and with things like inflation, that is more difficult. But I guess the focus for us is more on finding brands that, what are consumers wanting? They're wanting brands that are more sustainable, that have longer longevity, things like this. And I guess doing a better fit with this sort of thing, and shopping more, I guess, consciously at independent retailers.
Yeah.
So,
But I guess when prices are rising fast, there's more efforts that need to be done to like price discovery, and marketplaces are quite good at, you know, finding out what's the normal price for something. I mean, how is inflation going to affect your business?
Yeah, it's like I think that there's like two things that are happening at the moment that impact the platform quite a lot. So the first one is inflation is driving up prices across everything in our supply chain, anywhere from like the boats needing to buy diesel to just, you know, go out to sea and fish, which increases the price of the fish, and everyone is looking for better prices and trying to connect to more suppliers.
I go online and saying, can I get better?
Exactly. And then the second thing, which is an interesting one, it's the war in the Ukraine. So Russia apparently is like one of the biggest providers of cod in the world. So quite a lot of the supply chain of cod from Russia got to a place now that like people are trying to buy cod. There's no cod. All of a sudden, Rooser comes along and like cod just happens to be one of the fish that we stock quite a lot. So that drove quite a lot of business for us there.
Interesting. Sam?
I guess for us, similarly, like the cost of goods is gone up for everyone, for brands, the ingredients, the packaging, everything's gone up. And obviously the retailers are conscious of it. But I mean, for us, we've just got to kind of be a step ahead, I guess, and be there to offer, I don't know, whether it be promotional things or things at the right time to be able to kind of fit it and to help, I guess, and be that middleman to support them on both sides.
Yeah. And okay, and then in terms of your own businesses and scaling, is it kind of maybe now a focus on making money and like profitability, or is it just like still a phase of like just getting growth at all costs, like winning market share, or are you kind of thinking more carefully about that?
I can do. So we are VC back. We just raised our Series C in January. And I think, you know, like a lot of VC backed companies, we operated in a time of capital is cheap, so take advantage of it. I think now, you know, winter is coming, so it is. I think it just accelerates more the focus that you need to have to get less reliant on cheap capital, of course, because it's not coming anymore. But it's something that we had been working towards, and always, you know, a company needs to become more efficient. So we're just shifting a bit the focus.
So are you raising prices? Are you raising your transaction fees, or not? Are you trying to take more? Is your take rate? Are you increasing it?
It could be something that we look at. It could be or that we, you know, look at other ways of cutting spend, or look at increasing ways that we bring in different types of revenue. But I think it's I guess before the focus was on growth, you know, at all costs, because there was a cost to not growing fast, because everybody else has this cheap capital, so everyone's running really, really quickly. But the market is changing, so we evolved to that.
And Erez, you raised also recently from Google Ventures and Index. Never knew that they were so interested in fish.
Yeah, we didn't know either. It was quite interesting to find out.
So what are you doing with that money? Are you gonna spend it, or?
Yeah, so, you know, host, just like the WeWork series that we were talking about before, you know, get a few rappers to our company events. No, so I think that we're quite lucky on the timing that we raised our Series A from our investors. I think it just in time before the kind of market began to take a turn is the first thing. The second thing that we got very lucky with is that I have a Scottish co-founder who's extremely frugal, as you can imagine, and so we didn't commit to like a huge cost base to begin with. And then we basically are now in a position that we can think about how do we scale the business, like slowly understanding the marketplace dynamics first before committing to these like massive headcounts that, you know, are trying to fuel GMV growth for whatever cost. So that's the path.
What are you targeting in terms of GMV growth? Like what do marketplaces need to show? Is it like 100%? 200%.
I think that the benchmarks that we've seen is that you kind of still need to double or triple every year your GMV, depending on where you are. But I think that there is quite a lot of emphasis on like how are your cohorts behaving, and like, are your customers growing with you over time?
Yeah.
That makes the marketplace a lot more interesting than just to say,
Yeah.
I'm chucking all of these people into the marketplace
Yeah.
and they're transacting.
So it's
there's
like
a lot,
repeat transaction.
exactly. There's
like
a lot more
using you
focus on
more.
that.
Yeah, exactly. And what's next for Curate Beauty?
We're going through quite an interesting transitional period before we raise and looking at a different type of model to help supply salons and spas in particular with more indie brands in a kind of new efficient way that brings a new revenue stream for them, but without having to purchase so much stock up front. So we're kind of adapting our model to be able to kind of meet what the market's seeing and where the customer is right now.
Excellent. So you're gonna raise money for that? That's the idea.
Exactly.
Okay. So yeah.
Hopefully. Don't say it's all doom and gloom now.
Okay, so before we go to a few questions from the audience, this has been great. Just I guess in a very succinctly, where do you see each of your companies in the next 5 years? What's Curate Beauty in 5 years?
We're going to be massive.
Yeah.
It's going to be global. Yeah. We would love to kind of own this independent beauty space and be able to kind of give our brands an incredible platform to be the next starters in the industry and grow, I guess, retail in a different way. I think that there's so much innovation that still needs to happen within retail and there's space for it. And actually these challenging times are the perfect opportunity for you to kind of rise out of the norm and disrupt.
And international, or would you see yourself going international?
Absolutely. Yeah.
Okay. Erez?
I think the biggest thing for us is to get to a place where that stat that I shared at the beginning is slowly disappearing. So actually 3 fish caught, 3 make it onto someone's plate is like the vision for where we want to be in 5 years' time.
No waste.
No waste. Well, it may be consumer waste, but that's like someone else needs to take care of that.
Yeah.
And I think that as long as we stabilize the supply chain and get people to communicate better between themselves, then should be there. Fingers crossed.
I'm sure Ankorstore has a 5-year plan.
It's hard to say 5 years. I mean, we've been just launched in the UK for a year, and so to think out 5 years is a very, very long time for me. Where I'd like to see us in 5 years is, I guess the center of it is really around helping independent retailers, and especially in the UK and in many places where you see kind of dead high streets and all this, really about kind of regenerating the community around independent retail. So there's been a great piece brought out by the government last month where really helping independent retailers be able to get into independent shops on the high street, really having support from the government to do that. And we'd love to see that and to push kind of more retail into independent retail. So to be able to bring about more efficiencies within retail as well. So some of the things that we see on how retailers will source different brands and what they have to go through and all that in a day and age where I can pick up my phone and I can have a bag of dog food and a glue stick delivered. If I have to wait for the next day, that's a long time for me to wait. So I think there's a whole, a big gap that we can close for B2B. And not in 5 years, but definitely by 5 years, we'll definitely see something different.
Great. No, that's really good. And it's also really cool to hear like the social aspect, the giving back to society. I think what we're seeing a lot is now people want to work even more in these companies, especially what's making the world a healthier, like safer, better place, more interesting place to live. So thank you. Why not? Do we have a mic? Do we have a microphone? So maybe we'll take some quick questions from the audience to kind of finish off, and then I know we have drinks and food as well. So I know people will be hungry. But does anyone want to kick us off with a question? Otherwise, I can also go to some of the pre-submitted. Bas.
So, I've got a very long post. Thanks. So I think in the panel we have
two kind of specialized marketplaces, and although we also have a Ankorstore that is obviously has a focus on independent companies, but still I'd say in terms of product groups and industries, more horizontal marketplace. Us at Novoda obviously being very specialized now with diamonds and in the future all jewelry segments. My question, I guess, to the panel is, do you see being specialized as a competitive advantage or not? Or do you see being horizontal actually as a competitive advantage or not?
Very interesting question. Very interesting question. Do you think the vertical guys were going to expand? Are you going to expand? Like, are you going to start doing chicken,
fruit and veg, and some
chicken and meat and
some flowers as well, and taking care of. I think it's a very good question because, and I'm a bit biased. I spent the previous 7 years building a direct debit company that all we got asked all the time is like, are you going to add credit cards to your proposition? And we were like, no, we're just going to do a direct debit, and that paid off quite well for us. And I think that despite the similarities in like perishables, the industries are very, very different. And there's quite a lot of value in like staying very niche. There's a big problem like in each and every one of these verticals that you need to go and solve. And I think that like going horizontally just dilutes that focus. I think that at the end of the day, what you end up getting is potentially a very average platform that tries to cater to different needs. So we're trying to focus only on fish right now.
Do you want to add? I mean, you're clearly going on horizontal. I mean,
we're horizontal, but I guess horizontal within independent.
With a certain demographic.
Within a certain demographic, and I agree. There's a benefit in I guess for us not being niche, but in having a focus in what we're doing. Just because otherwise, similarly to getting into finance, it's like then you turn your eye to this shiny thing, and already there are lots of boxes that we have open that we need to solve, and I think it's just about being focused.
Yeah, I think also what people forget is just in B2B how big some of these markets are. So I think there's a lot of publications that go, the B2B opportunity is like 5x bigger, or I'm probably getting the number wrong, but it's like it's definitely a multiple bigger of the B2C opportunity. So that's what we found. I guess we've been in B2B. We could have just spent, we at MarketFinance, we help companies across all sectors, but there are people who just focus in on like one segment of the market, and that's a huge chunk. That's a huge market to go after. So I think, it seems like there's a lot more verticalized B2B marketplaces than like horizontal from where we sit. Any other question?
Just a quick follow-up one. As platform players, like your individual functions, maybe logistics or processing could be outsourced, right? How do you still control your customer journey and then still try and stay on top of your customer? How do you keep them with that 5-star or 10-star rating service? Is something that I would be keen to know about.
So we touched on that. So is it like, do you own like all the logistics, or do you outsource it?
We don't own any of the. We match, but we don't take inventory. We don't do the shipping ourselves. No.
Okay, but so you have to just stay on top of you have to like stay on top of the experience.
Exactly. Yeah.
And if the experience is not great, you have to like change.
Yeah. So it's I guess one part is communicating kind of what your expectations are to both the brand. So you must ship by this promised amount of time, and then also to retailers to say, hey, this is what you should expect, and then managing the customer experience kind of in the middle when things go wrong or go missing or whatnot.
Yeah. Have any of the panel had problems with that? Like, have you had to sort of solve? Sam, you're nodding.
Yes. There's no doubt about it. People have ordered stuff, hasn't arrived. It's not what they ordered. They've gone back and forth. And yes, being that middleman is the managing the tough bit, I guess, is customer satisfaction. You want everyone to be happy. And if they've bought something from you, I guess you just have to manage expectations and just make sure that the vendors know what they're putting themselves out for, and that the customer knows what they're getting. But I mean, really, most people have been brilliant. Like it's just communication and making sure that we're providing that good middleman service.
Do you give them like ratings and stuff, or like 5-star, or not really?
No, but they can give us ratings.
Yeah.
Obviously.
Yeah. So that you almost get blamed. You get blamed for the bad service. Yeah.
Sometimes, yeah.
I think we have time for maybe one more. Yeah. Tom?
For some of the more kind of specialized marketplaces, especially, there's obviously two ways to grow, which is get more buyers in total or increase how much they're spending. So, how do you see the growth over the next few years, especially, with costs of acquisition obviously going to be much more of a focus? Is it on increasing how much each person spends or getting more customers, and how do you plan on doing that?
Who wants to go? Who wants to take this?
I love that question because we got it quite a lot during the funding round, because at the end of the day, marketplaces where they fail quite a lot is that they don't manage to be the point that you do your business in. So they will be the niche thing that you go to kind of complete.
Yeah, the kind of add-on. Like,
Yeah,
I got some stock I can't sell.
Exactly. And again, I think for us, the key thing is like, how do you figure out, how do you become core to their business? That's the biggest thing before you start, again, chucking buyers onto the top of the funnel. Which again, from a GMV perspective, the numbers might look the same. But in reality, if you're not core to someone's business, then there's a question like, is this a viable marketplace, or is this like something that, in your spare time you go and...
So how are you doing that? How are you going to do that? You have some interesting things that you're developing, right?
I can't tell about the secrets. No, so I think for us, it's like mainly understanding like how the offline world operates, and then translating quite a lot of these mechanisms into just like how you build a platform. And the biggest thing, again, in our industry, I think Sam touched on it as well, it's like there's a relationship element there that is being done today in the offline world in a face-to-face environment. And the question is like, how do you get that feeling of relationship into an online world? Because that's quite big.
That soul, right? It's not just like a marketplace. It has to have that connection, almost like on a personal connection. But yeah, I'm just going to add one thing here, which is a great way to get people very loyal and committed is to stabilize their cash flow, right? And if you can, imagine the experience. I know that if I'm going to go sell, I'm going to get paid instantly, and on the other side, I've got many options of paying later. We believe at MarketFinance, and we're seeing it, is that if you can better the terms that were existing in the offline world, if you can make that experience more seamless, people start to give you more of their prime goods, their prime business, their prime attention. So, definitely, given that one of the themes is finance and marketplaces coming together, I think that's definitely something for everyone in this room to think about.